Hello, monsters. Is it time to reshort Freeport McMoran again? So let's take a look at what's on my radar. Here is FCX, symbol FCX, Freeport McMoran. This is a 4-hour bar chart. I put a 4-hour bar chart just to show a better close technical picture. I mean, I can look at a daily chart. This would be the daily chart. These are daily candles. Or you can look at the hourly chart. But wanted to see 4-hour charts to kind of give you a good glance of what I'm looking at. So here's the chart, and here is the trend. If I draw the trend since the rally started, right here. Let's make this bold, and here's the trend. It broke down on relatively high volume, not very high, but relatively high volume. About when was this? This was actually late last week. When did it break down? It broke down exactly after the crude oil inventory report came out last week that showed 9 million barrels increase. And ever since then, the crude oil has been under pressure. We talked about this in the video when I was discussing regional banks yesterday as well. Here's another technical view. If I draw this trend line right here. So let's put this here, and let's make this like that. So we broke through the first primary trend line, which was intact all the way from February low, and now we are attacking the second trend line right over here. To show you another better picture, perhaps this will help you. This is my daily chart in the stockcharts.com, and so here you have it came back to the support bounce, came back to the support bounce, came back to the both support, and then made a lower high, came back, and today it is trying to bounce through this support again, this trend support. You can even look at sort of head and shoulders topping formation here as well. You can see here there's the shoulder, there's the head, and there is your shoulder. If it breaks down here, which in my opinion I'm going to call this about 950, and the stock is currently trading at 978. If it breaks down here, this trend support, which has been intact since the beginning of March, I think you're going to see this go straight down to $8 a share right here. Now, I had this thing on my radar for the last couple days because when crude oil started to roll over, remember Freeport McMoran is not only just copper. It's they made some major acquisition in the shale gases space back in 2003, 2013, 2014 that turned out to be complete disaster. They increased. There's over $20 billion in debt on the books. I mean, blah blah blah. I can go on. You know all my notes previously about the company. So it's oil, it's copper, it's zinc, it's gold, and there's a whole bunch of other base metals. And if you go one by one, look at all of those base metals and what they have been doing in the last week and a half, you'll see they're all crashing. Here's oil. So this is the one that I discussed yesterday. This is once again 4-hour chart, and down 3.85%. Here is copper. This is copper. You can draw a trend line over here too. This is about to break down as well. So here's the trend. Let's see. I'm gonna put it here and go here and put it right there. So here's copper. Here's copper coming up to important technical support and basically rolling over ever since call it late last week. It's coming back to trend support. If it breaks down here, copper is at 2.16 right now. Most likely the next support it's going to find is probably going to be around, see these volume over price support bars, you're going to find this around here, which is 208. Let's call it between 205 to 208. If it's not able to hold support here, I think you're going to see copper go straight down all the way to new 52-week low to retest this level, which is around 195 to 197 level. And if that happens, I am pretty sure Freeport McMoran is not going to be holding up here. It's going to be all the way back down here to 5 or 6 level. So why do I bring this up? First, the technical picture is starting to roll over. Going back to my daily chart right here, you can see here's MACD. It's rolling over. Here's a chart that's attempting to break down. It's been bouncing off this trend support multiple times, and now it's about to break down. On the option front, here is my activity tracker. If I go to activity tracker and type in the symbol, this is what we have been recording. So ignore these two last lines because they're sort of stale now. They're a bit old activities. But let's take a look at what's happening since the beginning of March. March 3, they bought 5,000 of April 9 puts, still remains in open interest. March 15, 5,000 of March 24 9 strike puts. So that was actually last week, so this should be deleted now. March 16, they bought April 11 puts, 5,000 contracts, and then March 23rd, they bought 5,000 contracts, April 11 puts again. So if I just go to the option market, you'll see that there is this massive open interest sitting right here. If you go to April, you'll see there's 37,000 open interest sitting right here in April 10 strike puts. Now originally when they started buying blocks after blocks of these April 10 puts, if I go to the history, they were basically paying anywhere from, let's take a look at it real quick. So if I go here and if I actually draw the chart of the itself, the option chain itself, you'll see that they were buying it right here. This was on March 18. They were buying it right here. Here's the volume. They were paying up to $1.40. Then they appeared again on March 17 and then March 18, and then again recently last week all the way up to $1.20. So this open interest has increased sharply all the way to 37,000 contracts. I mean, I can go deeper and basically look at what the actual bid and ask was, or the fills were for this particular volume in those days, and I can tell you all those were buys. And so they're sitting right here, and the earnings are going to be a week after April expiration, which is going to be right here. The week of it, the earnings come out on April 21st, right here. So the following week is the April 22nd. So that's when April 22nd is earnings going to come out. I have a note here, and the reason why I bring this up today is because of this. Here's a note that came in my inbox this morning. This one comes from Breen Capital. Now, a lot of the times when these analysts send me reports every single day, they are mostly talking about the fundamental side of the story. But in this particular case, this is a technical analysis on Freeport McMoran. And I was surprised to see, the analysts talking about bearish divergences everywhere and basically looking for sell-off. So here the analysts talking about momentum, and MACD is starting to roll over. They see that the bigger bears can consider the possibility of 6.4 before a close above 11.7. So 6.4 before 11.7. To put this in perspective, let's go back to my chart, and here is FCX again. Here is that hourly chart again. They see before we see 11.7, which is all the way here, the highs basically from 3 weeks ago, they see this, instead of going the stock in this direction, they see a bigger chance the stock goes all the way to 6.4, which is all the way down here. Interestingly, that target actually makes a lot of sense because you see these volume over price supports. That's where that comes into play. So the analyst actually, the note ties exactly with my thought that the stock, if it starts to break down, you're going to see this go all the way to $6 to $7 a level. But before that happens, there's going to be some minor support coming into play around $8 per share. So step by step, 8 support first, and then after that we probably see this go all the way down to 640. Now, on the fundamental side, I want to bring up a note from Bank of America. This was from early March. This is exactly, see, once again, and I mention this all the time when I do these videos, what is it that I'm looking at when I'm doing fundamental research? This is another one that will give you some really solid clues. Now, I want you to pay attention closely. Here is Freeport McMoran, Bank of America note. Bank of America has a neutral rating on this, but I want to show you what their fundamental assumptions are for commodity prices going forward. These are all the type of commodities that Freeport McMoran sells. Copper, gold, and oil are the 3 biggest one, and cobalt is the 4th one. So here, for copper, for 2016 and 2017, Bank of America has $2.06. We are slightly above that today, but that's what their average price is in their models. We know gold has been on a tear. Gold is $12.50, and then for crude oil, Bank of America is at $46 a barrel for crude oil. Crude oil is trading at $37 a barrel, actually more like 36 now, almost 36 now handle, after failing at $42 a barrel last week. So crude oil hasn't gone even above 42 the entire year since the year started, and basically it's 46 seems like a pretty high shot. But here's what the assumptions are based on $46 a barrel. This is what the Bank of America thinks. But now let's take that to the next step. Keep this in mind: $46 a barrel and copper at 206. Now go up, and here's the chart that gets my interest. Now, I mentioned many times, remember, this was my top short back in 2015, and the reason for that was debt on the balance sheet. $20 billion in debt and the covenants that are attached to it. I want to show you, based on the Wall Street projections, such as the Bank of America projection for crude oil and copper that they have, what do they expect going forward. Now, this chart is going to be a little confusing, but I just want to make a big case. See the blue lines, blue bars in the back? Those are the forward covenants that are set by the banks that own that $20 billion debt. Let's go fast forward to end of 2016. So here's end of 2016. The covenant is set at 4 times EBITDA. All right, that EBITDA is going to be fine according to this line as long as the underlying commodities are trading according to where the projections are, which is $46 a barrel and $2.06 for copper. Well, what if crude oil is not there? What if actual pricing of the underlying commodity falls by 20% from here? Remember, copper is already coming down, and crude is already 20% below those projections. So what happens to the EBITDA? This is exactly the kind of stuff that's not in anybody's models. You will see this company basically in a year and a half from now will be in complete violation of all the debt covenants. $20 billion debt on the balance sheet. And so the debt covenant will be set at 4 times EBITDA. And here the company in violation back in sometime 1 year from now, it will be in violation of all those debt covenants if the pricing mechanism stays 20% under the projection levels. What I'm trying to say is that the market is always forward looking. They're not going to wait until this actually happens a year from now to basically start trashing the stock. To give you another example, let's take a look at CHK. This is another CHK holding. Remember what happened here? All of this because the company was going in default of its debt covenants. I mean, if you thought this thing was a buy at $16 or $15 or $10 or $8, it did not stop until it kept coming down all the way to $1.05. Don't be surprised if FCX is back all the way under low single digits going down the road. All right, my system is acting a little bit slow over here. But here, don't be surprised that if those covenants are not met, bank covenants are not met, and market is always forward looking, if the underlying commodity, which is crude oil, does not start to appreciate and go all the way back to $46 a barrel and higher, which is way up here, and copper starts to stabilize where it's at right now, which is, here's copper, it starts to stabilize and goes back to this level and starts to stabilize, those projections are not going to materialize in 1 year, and the company may actually be in default of its covenant based on what I'm reading. So the point is this: copper is coming down, crude oil is coming down. There's a lot of bearish activity since the start of March. Both of those are going to affect, Freeport McMoran. So how would I play this? I would go out straight to not April expiration, but the week after April. So you're looking at April, the expiration 22nd. April 22nd, actually that's the day when I close on my house too. But anyways, April 22nd is the week after the April expiration, because that will cover the next earnings cycle. And I would buy straight in the money 10 strike puts. Currently the bid ask is 88 cents to 97 cents. It only costs like 25 cents more than to buy the April. But it allows you to basically position for earnings downside. With stock currently at 977, these, it will cost you about, let's call it about 95 cents to buy those April 22nd weekly 10 strike puts. And it's already 25 cents or 22 cents intrinsic value in there. So, and the delta is pretty high, is 0.5. The target you're gonna have on Freeport McMoran is going to be way up. It's going to be all the way down here to 8, or you can just take a look at this chart once again right here. The target is going to be 8. So if that gets to 8 by the earnings come out, basically by this time around here, you're looking at the put options that will basically more than double in value. And so that's my target, $8. and keep an eye on this, and that's it.